Hi guys, if you're watching this video, you must be wondering what online trading is all about. Maybe you have a friend boasting about his winning stocks, maybe you've been researching ways to work from home, or perhaps you've just started taking an interest in financial market. However you came to watch this video, we're going to explain what online trading is, how it works, and why you might want to try it. It's important to understand both the opportunities and risks involved. Online trading can be rewarding, but it also carries significant risks, including the potential loss of your invested capital. Make sure to educate yourself and consider your risk tolerance before getting started. Put simply, online trading is using the internet to buy and sell on financial markets. And actually it's nothing new at this point. I first started trading online when I worked on Wall Street in 2006, way before I was a market analyst in the City of London. So this is well-trodden ground with a lot of financial regulations to keep you and your money safe. Pretty much every kind of financial market is available to buy and sell in, from stocks and shares, to currencies, to commodities, to stock indices like the Dow Jones. Now, a couple of questions might have popped into your head at this point. Should I call a stockbroker, or do I use my bank? The answer to both is thankfully no. Using the internet to trade through an online account is by far the easiest and most popular way for individuals and businesses to trade on financial markets. It might be a little hard for you to picture, so let's give you a sneak preview of a trading platform. That's the software that's used to place the trades online. Now let's say, for example, that we want to buy some gold. Luckily, we don't need a vault to store it in. This is all done with financial contracts online. We decide now is the right time to buy. We click the buy button to buy gold at one price, and our goal is for the price to rise to a higher price, sell it, and take a profit. Now the hardest part, we wait. Now this example is very short term, definitely what you call a day trade. That's where you open and close the trade in the same day. Trades don't have to be this quick. You can also hold on to trades for multiple days or even weeks if you want to. What we're looking at is a price chart. It has price on the vertical axis and time on the horizontal axis, and it shows us how the price is moving over time. You can view the chart in different time frames according to how long you expect your trade to last, and I will discuss that in a future series of lessons on charts and technical analysis. Now, the price is currently under our intended price target, but all things come to those who wait. When the market is open, the price is moving constantly, so it's very unlikely, or at least very lucky, if the price goes straight in the direction you want it to. As you might imagine, certain times of the day are busier than others, and breaking news can send the price flying in any direction. Boom, the price has hit our short-term target. Of course, there are always winning and losing trades. It's literally impossible not to have losing trades. The goal in trading is just to win more than you lose. So how does trading work? I think it's best at this stage to go back to the very beginning to understand how this whole thing works. If you do online trading, you're a trader. To state the obvious, the aim of a trader is to make a profit. This is done by buying low and selling high. If you buy shares of Apple for $200 and the price goes up to $210, you stand to make a profit. If those same shares of Apple that you bought at $200 fall down to $190, you stand to make a loss. But here's the thing, as a trader, you can't just go to a shop and buy Apple shares, gold, forex, or any other financial market. You need a broker. Brokers are specifically licensed to buy and sell financial instruments, so they do it for you and charge you a fee to do so. In the olden days, there would be multiple phone calls before the trade would occur, but luckily for you, all this infrastructure is largely computerized in modern markets, so it's all done with the click of a mouse or the tap of the screen on your device. All you need to do is decide what price to buy and sell at, and the online broker does the rest. Now, why try it? Let's be upfront about this. Trading is not for everyone. Trading in financial markets carries high risk, and not everyone is comfortable taking risks. Some people are naturally inclined to take risks, while others are more risk averse. When it comes to online trading, it's important to recognize your own risk tolerance. Depending on the statistics you look at, around 8 out of 10 traders lose money. That can sound intimidating when you first hear it, but it makes sense. Successful traders can make a lot of money, and that money has to come from the pockets of the unsuccessful traders. Trading is an equal sum game. If you win, somebody else loses, and vice versa. Trading is for people who accept the risks, understand the odds, and have the desire to overcome them and succeed. In many ways, trading online is much like starting your own business. Both involve working for yourself and taking a risk, but trading also has some unique advantages. You're the boss, so no blaming the postman or your secretary or taking credit for other people's work. All the wins and losses you experience, they're all on you. Startup costs are very low, no employees to hire or supplies to buy. All you need is an internet connection, a connected device, funds in your trading account, and your wits. This brings with it an unusual amount of flexibility. Many of these markets trade 24 hours a day, so you can trade when you want and where you want. For me, it's a bit of a cliche to be on your yacht placing trades, but if that's how you want it, there's no reason why not. And one of the most unique and thrilling features of trading online is that you always know exactly how well you're doing via your profit and loss record, which is updated in real time. To be a successful trader, determination and a winning spirit are essential. If you believe these qualities describe you, trading might be worth exploring. But I'm not going to throw you to the wolves. There are some tried and tested ways to minimize the risks and give yourself the best chance of being a successful trader, which I will tell you more about in future lessons. For now, I'll tell you the 5 simple steps you need to take to start trading. Step 1, you're already doing it. This video is part of a series of videos that will teach you how to trade. Step 2, register your trading account. This can be done in a few minutes via the online application. 3, add funds to your trading account. The golden rule here is to add enough to give yourself room to experiment, but make sure you're using funds that you don't need for anything else. 4, learning how to use the platform. You can place test trades in a demo account with fake money in it. And step 5, real life experience. The only way to truly become a trader is to place real trades with your own hard-earned money. I hope this video helped pique your interest in online trading. If it did, make sure to like this video and subscribe to our channel. Thanks for watching and happy trading.